Welcome to Trading Lounge on the European indices, and starting with the DAX here. We've got two counts, but our primary count is bearish. So we've got wave 3 here, then an A, B, C, D, and E here. And with a triangle, each wave within the structure is 3 waves. And that's what we're looking at in wave E here as well. So basically an A, B, and C wave here. This B wave here is becoming quite complex in here. If we look at wave A being simple, wave B being complex, and wave C down here in 5 waves will be simple. The bullish count that we have is wave 1 to this point from this low here, and then ABC for wave 2, and then up for wave 1 here, and then looking back for wave 2. Now wave 2 is already pulled back to the 50% retracement level, so it may already be in place here. Otherwise we'll also see it pull back. So there's not much difference in all of this. So let's just go into the intraday and have a look at this. Now the way that I have it here is that we've got wave on the 4-hour chart. We've got wave D here, and we're looking for an A wave, a B wave, and then a C wave to the downside. But I have to say the C wave to the downside should be in a nice 5-wave sequence, but I'm not really seeing that in terms of 1 and 2 and 3 and 4 and 5 here. It should be quite sort of clean and simple, but it's not. All this in here is rather complex. So I wonder if we stay with this wave 4 here, is it actually, have we got wave B finished? Because we've had this up for an A and a B and a C wave to here. So it may be that this can be the A wave here, and then a smaller A, B, and C here, and having this B wave, copy this, putting it over here with a small move to the upside here before we actually finish to the downside here. It's a little bit complicated. And then we've got the bullish pattern as well, which would see further upside. One of the important things here, though, that you can use for a bit of a guide stick is that the 12,650, which is the halfway mark between 500 and 800, and you can really see that it's become a real sort of balance point within this market, so we can use that. The bullish count for this market is, as I mentioned, having wave 1 up here, ABC for wave 2, and then having all of this as wave 1, and we've either got an A and a B and a C wave here for wave 2, or we're going to see wave 2 pull back into this space here. So one of the things that we can do here is, first of all, I'm going to move this trigger down to this one here and down to this one here. We may get trapped here taking a long position here, but we need to take our trade signal. So at 12,600 and that'll do for 50 there. While we're above that level and we get a signal, then we'll take it, right? If we were under that level, we wouldn't take it. If we're under this level here, then we would start looking for short trades to the downside from this point on. So let's go, where are we? 2-hour chart. So on a 2-hour chart here for the bullish count with wave 2 here, looking at all of this as wave 1 here, and then an A and a B and a C for wave 2 here. So I can look at this here. I mean, it's messy. So it's messy, so it can't be trusted. So what I'm doing is I'm working off support and resistance, and the 12,650 is my current support. The market may not even hold that support. It's coming down, checking it, So we would have had, if I use the CFD chart here with the futures market wrapped up in it in the after hours, I can use this as wave 1 and wave 2 here. If I was looking at the cash market, then I'll use this one, the green wave 1 here for the top here. But either way, if I was counting it in a positive way, I would have this as wave 1 and wave 2, wave 1 here, ABC for wave 2, and then pushing up into wave 3 at that point there. So these triggers here, I think we can move this one down, not to that high, but to this high in here. Not to say it's going to be triggered or not, but we just keep moving it into position, and if it pops up, then that's fine. But it may be short-lived as well in here. So this is what we've got to be mindful of here. But at the same time, we have to take that signal. Now, if that signal is triggered, right, if it is triggered, then move the stop up under this low here. And then that will reduce the risk as much as possible. And then we have to leave it, we have to let it go at that point. Okay. On the downside here, if I just remove that now, on the downside here, if we go to, I don't know what the 1 hour chart's got here. Yeah, so for the 1 hour chart here, this brings in the other picture here. So wave A to here, wave B to here, and then 5 waves up for wave C, which will take us up into supply zone here at the 12,800 area through to here, and then we can have our 5 waves down. So I'm not sure how this is going to play out here, but I do know that we need to take our signals. So if that is breached here, then we need to go long from that point there. And if you were going to go short, then always using retested resistance. So the market would move through the level here, come back up and test it, and then you would have your reference point low there, which would be your trigger, and then down from that point there. So you don't want to trade the breakout here, because you could get easily trapped. Right, moving on to the AEX and its correction. We know that Unilever is being resisted at the 50 mark, 50 euro, so 5 being the second strongest number. So we need to look at this as a more complicated wave 4 here. So just on the 1 hour, wave 3 up here. And then we were looking at it as an A and a B and a C here. And then we're looking at this being positive at this point, but then it got a bit sort of like, well, not looking really good for an impulse wave. So we put wave B here, and that's what we'll need to do now. So just removing that wave B, moving this one over to here, and don't need this one here, don't need that wave 4 there, this wave 5 can move over to here. And so if I just tidy this up in here, and we'll just look at this wave C, the green wave C here should be 5 waves, so we've got to count 5 waves down here. So maybe we can just borrow these over here, copy that. Looks like wave 1 here, wave 2 here, wave 3 is a bit short and stubby there, but it's strong. And wave 4 does overlap wave 1, make a note of that. So that's the weak spot in the analysis at that point. And then wave C down through here. Maybe there's a little bit more to go in here. Bit messy there. Yeah, there can be another little bit more down here, so that's okay. So even though this is bearish here, it's got quite a bullish picture about it. And the situation really is that this move down, unless I've counted this wrong here, but I think we're okay. So this move down through here is in 3 waves, so it makes this is correct, bullish corrective. So no matter what comes out of the gate over here, it's going to be part of this, which is corrective. So I feel okay about this. So once again, if we take out wave 4 high here, then we'll go long from that point. Okay, so that's all. We're not going to go short here at the moment. You could do on a retest. So let's just say that, let's say this drops down here a bit further and then goes back up here, right? Then we can use, don't want to be fixed on one side, then that reference point low here after the retest, right? Then you can go short from that point. That's if we got it totally wrong at that point, which we could have, because we're looking at the Nasdaq reacting from 7,500, 500 being a big number, and we're also looking for sort of short-term highs in those markets there as well. So they may apply pressure over the Atlantic here. So onto the FTSE across the channel. So with the FTSE here, we're looking at a couple of things here. One of them was that we felt, if I just go back to the 4-hour chart here, that can bring in a bit of a picture, or even the daily chart. It's always nice to have a look at the bigger picture. So in this case here, we're looking at once again, this move down through here as wave A here, and then I've labeled this all here as corrective because it's got overlapping wave structures, but we've made this new high here. This move down through here, we could put it as wave C being finished at this point here. That was one of the things we were looking at. It has made a new high here, so that means that we may need to bring wave B over here into even a more complicated scenario, but that means that I can take that wave C away here, and we can also still look for this to move down here. Now, this particular move going up here, we're counting it in 5 waves. So we've got 1 and 2, and we've got the 3rd wave now, so the 4th wave and the 5th wave. And at that point, then we can see it come down for the 5 waves at that stage here. I suppose we could, this move down through, coming down through here, if this is 5 waves down, then we can look at this as an A and a B and a C wave here, but it's coming back up and testing these old highs here. I just better check on the cash market for a second and just see if it's taken out that that high, and yes, it has taken it out by a point or two, so this would be the next logical step for this here, having wave B here. Look, it's possible that this is all bullish here as well, but it's just not a very good looking impulse wave. It doesn't appear to be 5 waves. I mean, I can force it into a count of 5 waves being bullish and we go up from here, but it just doesn't look right. So I'm just going to keep calling it corrective. Once these 5 waves here play out, and let's just say after these 5 waves we have an A and a B and a C back here, and then we move up from this point and find support here, well then I'll turn bullish at that point. If we're on 7,800, we'll go bullish from that point, but otherwise we need to consider what's going on here. So in this instance here, we were looking for wave 2 to come back to here, but it had moved through this, so that's why we started to change things. It was possible that we could also technically put wave 2 here, but now we know on the cash market it's taken out this high here, so we can't do that there either at this stage. So all of that is destroyed there, so we'll go back to the hourly chart, and what we have been doing is we don't need this wave 1 here anymore, but I'll just store that over here, and I don't think we can call that wave C. It's possible, but it's so short, just doesn't make any sense. So I'll just move that out of the way here, but what we've been looking for, we're looking for this as possible ABC to the top side up here, so we know that that's not the case now, so we can stay with our primary impulse wave, because we would have been more on the impulse side of it once we're above the 61.8%. And in fact, we're looking to go long there with the stop below here, so we can move that stop now up under this little low here. Okay, and we'll see how we go with that. So in terms of the count, we've got 1, 2, 3, 4, 5 for 1 and back for 2, and probably an A and a B and a C to here, so we should really move that to there. And then we've got wave 1 and 2 and 3 and 4 and 5 for the 3rd wave, and of course the A, B and C for the 4th wave here. So we should be looking now at wave 1 here, wave 2 here, wave 3, 4 and 5 to finish up into this space. So don't need that. Wave 4 breaking the trend channel as well in Elliott, that's what it does. So taking the lower wave 1 to wave 2 here, I would expect wave 4 to break the trend channel. So that's how that's looking. Now, with this in mind here, let's just clean this up a little bit here. So once we get that in play here, then let's just take it to that high here, then that would leave us back down here for this move here, which will be 50-60% roughly there, as an ABC correction possibly, or a top in play. So this is what we've got to figure out. So we'll be looking either an A and a B and a C here, and then further upside, or we'll be looking to come down from that point there. So if you're trading this long here, then the target is 7,800 here. Yes, it can go higher, but it's just easier to play to the large number. And in fact, it's always nice to move out on an even number, 2 points between the whole number here. So 798, that's the number that you'd pull out on if you want to get out early. If you want to get out earlier than that, well then the 795 would be the number to get out on. But from here we're looking at 1 and 2 and 3 and 4 and 5, and then we're going to either have an ABC back to this point or back to these supply levels, demand levels here, and otherwise we're in a top. So we need to work it out, and I won't be able to work the rest of the pattern out until we're into this space here. Either way, well, it'll be long or short from that point. So, and the MIB, let me just find that. Okay, Italy. So let's just have a look at the 4-hour thing here. So what we were looking at here is that we have wave 3 here. We know that this is a corrective move to this point here. It's possible that we could have this wave 5 sitting here in this instance, and then having all of this as a bullish move up here. But once again, it's not displaying very nice wave structure here, so we haven't chosen to do that. And our main point here, if we were going to go long here, we would need the 22,000 here as support. That's our primary reason for going long, if that's going to be the case. And you know, it's been a few times now, but we haven't got that tested support. We've had the breakouts up here, but they've never come back and supported on the levels here, you know, so that's been just a bit unfortunate. So the better count here is an A wave, a B, a C, a D, and an E wave here. And once again, we could count the move down through here as from wave 4 here to wave 5 here and be completed on this low here. It's possible, but it just seems a little bit too short, and it hasn't taken the low of wave 5 out. It doesn't, wave 3 here. It doesn't have to do that. It just needs to display 5 waves in here, which it has done. So it's possible to call it a wave 5 here. So that left us with the situation of going, well, okay, let's have a look at the rally here that moves up, back up in here into the box, or you always drift over. You always take the 61.8%, and you always drift over to the closest largest number. So that's where we are there at this point, and the move up here on the on this market here, which is a blend of the cash market and the futures market, because it trades in the off hours. So even in the physical market, the cash market, it does appear that we've only got 3 waves up here. So it's likely that we're right with this wave 2 here. So if that's the case, then we'll be coming in more of a bearish move to the downside here. So if I can just copy this here, we would look for wave 3 to come down here lower, yeah, and so on. Now, one of the points here that we need to understand is that from this low here, whoops, just a little tad too low there, and to this high here, we're right on the 61.8% mark here. So if we're going to get a bounce anywhere, this is where, whoops a daisy, this is where it's going to come from. Okay, so as long as we know that, just remove that. It cleans that up a little bit, so I'll just save that. We'll go to the 1 hour chart. So with the 1 hour chart here, knowing what we do now, we've got this move down through here, probably as wave 1, and possibly wave 5, but this move up here, it was starting to look like an impulse wave. It looked a little bit shaky to start with. I mean, it's possible that we could count this as wave 1 and wave 2 here, and then wave 3 here, an A and a B and a C for wave 4, and then an extended wave 5 here. But it just doesn't really have the right look and feel about it, you know. But at the same time too, this move from the top here has moved down to the 61.8% mark. So you wouldn't short it on a number like that. You just can't do that. And then the other problem of shorting it here is that we've got 21,500 here. So really the short trade here, I'll just put that in there so we know where we are from next time. So yeah, this number here, this is the next critical one here level. So we know that 21,000, 22,000. So we know that we need to be long above 22,000, well, on support, okay? And we're trying to work out if we're going to get 5 waves up here or 3 waves. The bias looks like it's 3 waves up here. Okay, so then that would leave this as a bearish thing, but any move down here would bounce off the 61.8%, and even if it dropped lower, it would still bounce off the 21,500 area here, right? So it's possible for the DAX and the AEX and the FTSE to move up. So what we need to do is we need to kind of think in those terms as well. So we'll take this high here, this low here, and you might need to adjust this, of course, depending on what the current low status comes in at there. But then to the upside here, then this would be the resistance to the upside here. And gravitate over to the closest largest number, which is 21,800, which is all part of subgroup 2 here, 65, 72 and 80. So it's possible for this market now to move up here in 3 waves and then fail from that point and come down. If it comes down to here, yes, it's going to bounce back up in 3 waves here, and then it's going to move through and then so on and migrate from being support to resistance here. So it's a bit of a tricky journey to the downside. Yeah, if this market drops down to the 500 here, then the 61.8, the important number will be this one here, the orange line here. So just take that in board. We're a long way from being onto a long trade here, but there is a possibility for a short trade here. But you need to bring that in line with the other markets as well. In terms of being bearish, there is a case for well, the strongest markets out there is the Nasdaq, apart from some of the ones in Asia like India. But the Nasdaq is going to react, or is reacting, from a big number, 500, 7,500. So it's reacting from there. So there's a possibility that there's a top in play for the US indices. There's also a small chance that there's another little high to go there as well. So yeah, a lift in the indice markets and then a drop, and that would line up in this case with this here. So you could short from here. Not a very sort of safe thing to do. If it moves above this level here and then finds the orange line here at resistance, then you could look to get a small position here and then wait for the bounce to come back up and look for another short position there, and then get it trapped under here, and then you're okay from that point. So we'll be going down from that point. If this becomes the resistance, we'll be definitely going lower from there. The next trend down here will be longer than this one here. Okay, so yeah, you'd be able to trade 500 points down to this point here, and even lower from that there as well. All right, thanks for tuning in, and enjoy the weekend. Cheers.